What is going on, guys, and welcome back to the Intelligent Money Investing channel. Today, we're going to be talking about the current state of PDE ratios and why I think, even though they are very highly valued, the S&P is very high right now, this could be the new normal in the stock market. Just kind of a contrarian view of what a lot of people are saying right now that we're due for a sell-off and stuff like that. And while I agree to it for some extent, I'm going to take the counter argument today on this video. So I hope you guys enjoy. But before we get into it, I want to ask you guys to please drop a like on this video. Leave me a comment below on what you think of the current state of the markets. It really helps out the channel, gets more views, gets more recognized. So I'd really appreciate it, guys. Thank you. Okay. So as we can see, VOO, a S&P 500 ETF that mirrors the market, essentially of the S&P 500, the index, is up over almost 100% in the last 5 years. And the PDE ratio has just been going up and up and up. We're at a current PDE ratio of 27.5 in the S&P 500, and that's pretty high historically, honestly. It's usually more realistically in like the 20s, maybe a little bit under that, maybe 18. And a lot of people are concerned that the market's really due for a sell-off, even though a lot of the fundamentals right now are pretty solid, and we did just deal with a big sell-off, although we have rebounded from that. The problem is right now it's hard to have that big of a sell-off that's sustained when people. It's really a buy the dip market, and it's a market where there's a lot of good fundamentals with more jobs being added, everything like that, and a lot of more kind of investment in the country. So that helps the U.S. economy grow over the long run. So people are pretty optimistic about that. Now I have two main reasons why I think the high PDE ratio might be here to stay in the market. And the first one's going to be the cycle of kind of taking a kind of growth over profit right now. So we have a lot of companies like something like a Spotify that's about to IPO at a $20 billion valuation. Really, it's not going to profit anytime soon. Its growth is good, but it's not that great, and people are going to value it highly. Same thing with Snap. Snap's not profiting. Twitter, I think, is just starting to profit. Like Amazon just started to profit, and it was valued at hundreds of billions before it profited, I believe. So a lot of people are valuing that high growth, especially in Amazon. That's a company that, let's look at its PDE ratio. And while people are expecting these to go down over the long run, it's got a 255 PDE ratio, which is just insane for like a extremely high valuation. And while people are expecting this to go down, that's why it's gotten up so high, because Amazon can really stretch out those profits. They're really in growth mode right now, so they're not too worried about their PDE ratio. They're more worried about growing their company and growing their brand over the long run. So, with that combination of that, because that's not really historic in the market, but with all the transformations that have been happening, I do expect these to go back down naturally, as either companies are going to start profiting or they're going to die off. Because if you're a company that can't make a profit, you've got nothing. Another one is going to be like Tesla. They're losing a ton of money, but are valued at about 40 billion, I believe. So those are just a couple of examples as to why a lot of people are really valuing that growth and that potential for future profits over profits today. So it's really a growth outlook. So as long as that's around, I believe the PDE ratios are going to be higher than they are historically. So, and my number two reason is going to be the access that people have to the markets with these days. So beforehand, a lot of people would have to go through other big brokerages, pay big fees in order to get into the market. And when that was happening, pretty much only rich people would buy stocks. Like the common person, like wouldn't be able to go in, open up a Robinhood account, and trade for free with no commissions. It'd be pretty much be the millionaires and the people with a vast amount of wealth that would need deals and want growth from their stocks. So with that, like if you guys know economics, there's a supply and demand equilibrium, and with everything else equal in the market, there's pretty much an even supply of stocks. Yet now the demand is higher because more people can be in the market hunting for these stocks. So when there's more people in the market and nothing's really changing, then that demand's going to push the equilibrium to a little bit higher prices, rather than just sticking around at the historically lower PDE ratios that we've seen in the market in the past. And while I do think we are due for a little bit of a correction, and the stocks have run pretty high here, it's not out of the realm of possibilities that we're going to start seeing a new higher PDE ratio for a lot of stocks now, just because of the availability for people to get into the market just alone, and the people are really valuing that growth. And it's really been a transformational period in the market where the only thing we care about is not profits. And with the tax cuts that have come in, that's probably going to drive the PDE ratio down a little bit as companies start to see more and more profits from that roll in as they take money in from overseas and are just taxed in the United States alone. So, I want to know what you guys think about my two theories. This was kind of just what I was thinking of as a little bit of a contrarian view to the popular belief. Pretty much everybody on YouTube and all the financial people that I've been saying are like, oh, stocks are overheated right now. Stocks are really high, historically high right now. So, but I think there's a couple things in the market that have kind of affected that weren't really present in the past. So let me know what you guys think down below. Please drop a like on this video, subscribe. If you guys want to download that Robinhood app, there is a link down in the description that gets us both a free stock, which would really be awesome for both of us if you're starting out in the stock market. And I will see you guys in the next video. Thanks for watching.